Imagine this. You wake up every Monday morning and instead of waiting for your bi-weekly paycheck, you're getting paid, every single week, just for holding certain investments. Weekly dividend payments. For most people, that sounds like financial freedom. A steady stream of cash flow that keeps coming in, week after week, without you lifting a finger. But here's the thing, is it really that simple? Is weekly dividend investing the secret shortcut to living off your portfolio, or is it another too-good-to-be-true idea that comes with risks most people never hear about? In this video, I'm going to reveal the truth behind weekly dividend payments. We'll explore what they are, how they really work, which funds and strategies can generate weekly income, the hidden risks nobody talks about, and finally, whether weekly dividends are a smart approach for building passive income, or if you should stick to more traditional dividend strategies. So, grab a notebook, settle in, and let's pull back the curtain on weekly dividend investing. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. Before we dive into weekly dividends, we need to understand the foundation, dividends themselves. Dividends are simply cash payments that companies distribute to shareholders, usually from their profits. Think of it as a company saying, "Thank you for owning part of our business. Here's your share of the profits." Now, most US companies pay dividends quarterly, that's 4 times a year. Some companies, particularly outside the US, pay semi-annually or annually. And then, we have a growing group of funds and companies that pay monthly. Here's why that matters: people like consistency. Just like employees prefer getting paid every 2 weeks instead of every 3 months, investors are drawn to more frequent dividend payments. It creates the feeling of a regular paycheck, which can be especially comforting for retirees. Weekly dividends, then, are the ultimate dream. A steady income stream that mimics a weekly salary. But here's the catch: weekly dividends aren't the norm. They're rare, and the way they work is a little more complex than most investors realize. So, let's break it down. When someone hears weekly dividends, they often imagine a single magical stock or ETF that literally pays every 7 days like clockwork. But the truth is, very few investments actually operate that way. So how do investors create weekly dividend income? The first method is through funds that pay more frequently, like monthly dividend ETFs. By combining multiple monthly payers with different payout schedules, investors can essentially create their own weekly paycheck system. Here's an example: one fund pays on the first week of the month. Another pays in the second week. A third one pays in the third week. And a fourth pays in the last week. If you own all 4, you've just created your own weekly dividend stream, even though none of them are paying you weekly on their own. The second method comes from specialized funds that experiment with payout frequency. Some of these are tied to options income strategies, funds that generate premiums from selling options and then distribute that cash to shareholders. These can sometimes result in weekly style payments, but they're often inconsistent and come with higher risk. The bottom line is this: weekly dividends exist, but in most cases, they're engineered through portfolio structure, not because a single company is paying you every Friday. Let's talk about some of the most popular funds that investors use to build weekly income streams. First up, we have JEPI, the JP Morgan Equity Premium Income ETF. It pays monthly, has become incredibly popular, and generates income by selling covered calls on the S&P 500. Then, there's JEPQ, which is similar but focuses on the Nasdaq 100. Both of these have yields in the 7 to 10% range and pay consistently every month. We also have the Global X Covered Call ETFs, QYLD, RYLD, and XYLD. These funds are designed specifically to generate high income, also on a monthly basis. And of course, the famous Realty Income Corporation, ticker symbol O. It's actually nicknamed the Monthly Dividend Company because it's been paying shareholders every single month for decades. Finally, we have a newer player, the YieldMax ETFs, such as ULTI, MSDY, and YieldMax. These funds push the boundaries by delivering extremely high yields, through options strategies and frequent distributions. Some investors view them as a way to achieve almost weekly style payments. But again, higher risk comes with higher yield. Notice something. None of these are truly weekly on their own, but together, they can give you a steady flow of income across the entire month. Now, let's talk about the advantages. Why do people chase weekly dividends? First, consistency. For retirees especially, having money hit your account every week can make budgeting easier. It feels like a paycheck, and that psychological comfort is worth a lot. Second, cash flow. If you're living off your portfolio, it helps to know you'll never go more than a week without income. That can provide peace of mind, especially in uncertain markets. Third, compounding. For investors who reinvest their dividends, more frequent payments mean more opportunities to buy additional shares. Over time, that can slightly accelerate the compounding process. And fourth, flexibility. Weekly income can give you more control over your finances. You don't have to wait months for the next payout, you always have new income arriving. All of these make weekly dividends very attractive on the surface. But as always, there's another side to the story. Here's where we need to be cautious. Weekly dividends sound great, but they come with some risks and trade-offs. The first risk is yield sustainability. If a fund is paying an unusually high dividend, especially on a frequent basis, you have to ask, where's the money coming from? Often, it's not purely from profits, it may come from options premiums or even a return of capital, which slowly eats away at your investment. Second, taxes. If you're investing in a taxable account, frequent dividends mean more taxable events. That can complicate your tax situation and potentially reduce your net returns. Third, volatility. Many of the funds that pay frequent, high dividends rely on complex strategies like covered calls or leverage. These can limit your growth potential and increase your downside risk. And finally, the illusion of safety. Just because you're receiving cash every week doesn't mean your portfolio is safer. In fact, your account value might be slowly declining while the dividends make it feel like you're doing well. This is the truth most people don't talk about. Weekly dividends are exciting, but they don't automatically mean better or safer investing. So how do you do this the right way? Instead of chasing one magical weekly dividend fund, build a portfolio of strong, reliable monthly dividend payers with different payout schedules. For example, Week 1, JEPI. Week 2, Realty Income, O. Week 3, QYLD. Week 4, JEPQ. By combining these, you've just engineered your own weekly paycheck system. Add in some diversification across sectors like real estate, equities, and options-based strategies, and you've created a reliable income machine that balances cash flow with stability. So, what's the truth behind weekly dividend payments? The truth is that very few investments pay true weekly dividends. Most of the time, weekly income is created by structuring your portfolio wisely with monthly payers that distribute on different dates. Weekly dividends can provide peace of mind, consistency, and a sense of stability, but they also carry risks, especially if you're chasing extremely high yields. The smartest approach is to blend consistency with sustainability, focusing on funds and companies with strong track records. If you found this breakdown helpful, make sure you hit the like button, subscribe for more deep dives into ETFs and dividend investing, and drop a comment below. Would you prefer to get paid weekly from your portfolio, or do you think quarterly dividends are just fine? Thanks for watching, and I'll see you in the next video.